Besides the interest rates, mortgage interest rates, what's different about buying a house in the second half of 2022 than in the first half of 2022? And in this video, I'm going to explain to you the differences. Yes, interest rates are different, but there's a lot more than that. And I'm even going to get and present a case for why it may even be, you may even have an advantage as a buyer now over the buyers that bought in the beginning of 2022, even though the interest rates have taken a climb. I'm Justin Woodall with Woodall Realty Group, and I'm going to share my screen today. I'm going to go through some numbers with you. I want to show you some history of what's happened and why we've seen the market change so dramatically over the last 2 years, and explain to you what's going on with the market now. So as you know, we've been in a frenzy the last 2 years. The market has changed a lot. Prices have risen. Inventory's been low. But what's going on now? It's, the media would say things are, home sales are dropping and things are getting crazy, getting worse, and the world's coming to an end. The media just loves to, if it bleeds, it leads kind of thing, So what can you trust in the media? What's really going on? And that's what I want to share with you today in the Athens market, the Athens, Georgia market. What are we seeing? What's going on? I've got a little presentation here. It's short, but I want to show you. So this is inventory levels in Athens going back to January of 2020. So as you can see, most of 2020, there were over 400 homes on the market at any given time. Now we have less than half that. And all of 2022, we've pretty much had half of that. So this is a snapshot forward in time into the last 12 months. So you can see a little closer, focusing on the last 12 months. What have we seen? Again, the inventory has just continued to drop, and it's still low. And it's as low as we've seen. Now we're starting to see it rise just a hair, it feels like, but what's really happening is that things are just sitting a little bit longer. We've seen the demand drop a little bit because of interest rates. But again, I'm going to show you in a minute why I'm not sure that that is the proper perspective for buyers to have. But so inventory is still really low. The reason homes are sitting a little bit longer is simply that the demand has dropped a little bit. It's that, and I think some sellers are chasing a high price when things are starting to level out a little bit. And I'll show you that here. So this shows prices, the average close price going back to January of 2021. So you can see beginning of January 2021, average sales price in Athens was about 265 or so, between 265, 270. And that trend has gone upwards to now where it's more like about 365 or 370. So a huge increase since just January of 2021. That's less than 2 years. So we've seen prices skyrocket again because of high demand, low interest rates, high demand, and prices have skyrocketed. So what are we seeing now? And so I'll added this line in here just to kind of show you some of these blips. I think is what's happened is you've seen multiple offers, you've seen competing offers, you've seen buyers competing against others and saying, I'll go up 10 grand, I'll go up 20 grand, I'll escalate up 50 grand, whatever it is. And so the blue line is probably a little closer to where prices should be. What we've seen is that they've actually surged up during various times. And even the blue line, if you think about it, going from 260 up to really 350 today, that's still a huge amount of appreciation. But I think those spikes have been because people are driving the price up, that auction effect, making prices rise. So buying a house in the spring at a lower interest rate versus now, does it really cost you more? And I just want to go a little deeper. Don't just scratch the surface of the interest rate. Let's go a little deeper and let's really analyze this thing. And that's what I'm going to do on this slide. So hang with me. It's going to be some numbers, but hang with me. So early 2022 in the spring, really pre-Easter, we saw interest rates around 3.5%. They hovered. I'm using 3.5% as an average. They were in that low to mid threes. So I'm going to use them 3.5 as an average. But say a $500,000 house comes on the market and gets bid up to 550, escalated up because you've got 4 or 5 offers on it. And to win that, we even saw buyers sometimes say, well, I'll do no inspection, no due diligence. I'll waive my appraisal contingency. I'll waive my finance contingency. I'll put everything out there, waive everything, expose myself to a lot of risk if I get into that house and there's a $30,000 repair that I wasn't counting on, or a $10,000 repair, or whatever they may encounter because they failed to do the home inspection. That's a cost in addition to the 550, the 50 grand that they already went up. And not every house went 50 grand above list price. Again, part of it was depending on where it was listed, where it was located, the price it was listed at, how much demand. There's a lot of variables, but again, I'm using kind of speaking in generalities, but 10% above list price was not unreasonable back in the spring of 2022. Let's just use this scenario. A $500,000 house bids up to 550, and you say you're putting 20% down. We saw a lot of cash during that time as well, so people would just plop 550 down. But let's just assume you finance that with 20% down. You're putting down $110,000, financing 440 at 3.5%. Your payment would be $1,976 a month. That's principal and interest, does not include taxes and insurance. But I'm going to compare apples to apples here. So now rates, again, they're hovering between 5 and 6. They went up closer to 6. Now they're closer to 5. So I'm using 5.25. Depending on when you watch this video, they may be higher or lower than that. But let's say rates are now at 5.25. Well, that $500,000 house now is probably not going to get bid up. We are seeing some instances where we're seeing multiple offers and they're going up. But generally speaking, they're selling closer to the list price now. And in some instances, you may even see a seller pay some closing cost, or you may see them come off just a little bit. So the house that sold in the spring that should have been 500, and because of the frenzy got bid to 550, well, now it's probably still kind of 500 because these rates have tempered the market. It's tempered the demand. The demand has decreased. So now that 500, the house that should have been 500 in the spring, but went at 550 is still kind of at 500 now. So now you can buy it at 500. And guess what? If you don't have competing offers, you also get to have a due diligence. You can do a home inspection. You can make sure there's not a big major problem with the house that you're going to have to encounter after you close. You can build in financing and appraisal contingencies again. And so what this is doing is it's moving it back towards a little more of a normal market, what we saw pre-COVID, where, you know, you actually could protect yourself as a buyer a little bit, and you weren't just having to throw all the stops out in order to win the house. For the last couple of years, it's just been about winning the house because I've made offers on 7 and I'm tired of making offers. I just want to win this next one. I'll do whatever it takes. And so now you can build in due diligence, build in appraisal contingencies, build in financial contingencies. And this has opened up the door too for some of these FHA buyers, VA buyers that almost could not buy a house the last 2 years. They can now buy a house. And so because they're not getting beat out by cash offers and things like that. So let's just run this same scenario. But in this case, instead of putting 110,000 down because you're buying the same house for 500, you're now putting 100,000 down. You're financing 400,000 at 5.25. So what does that do? That's a payment of 2209. So you say, over $200 a month more. That's why we can't buy a house. We can't. So $233 a month times 12 months, that's $2,796 a year. So yes, it cost you a little more to own that house, but look at what the guy in the spring did. He or she actually put down $10,000 more than you did and paid $50,000 more, which means technically it would take about 4 years for you to catch up with the same down payment that they had. But guess what? If rates drop at some point in the next 4 years, which most of the gurus, most of the people are saying, yeah, they're going to stay high for a year or two, but they're probably going to drop again in the future. So if that happens, and you refinance your $400,000 mortgage, of course, it's going to be a little bit less in a year or two. Won't be a lot less, but a little bit less. But just say it's 400 and that's what you refinance back to 3.5. Well, then your payment drops to $1,796. So you're actually $180 less per month in a few years than the person that bought earlier this year. Now, again, there's no guarantees. If we could predict the future, we could be rich. All of us could, but we can't predict the future. We don't know what's going to happen. Rates may or may not drop over the next 3 or 4 years. But if you feel like there's a good chance they may drop back down in the next 4 years, you could buy now and end up being much better off because you're going to put less money down and you're going to be in the house at a smaller price, which means when you get ready to sell your house versus the guy that bought in the spring, then you're going to make more money in 4, 5, 6, 10 years whenever you sell because you bought it for 50,000 less. And again, I'm throwing out numbers here. I'm using that 10%. But simply because you didn't have to compete and get in that auction effect and bid way above the list price, because you didn't have to do that. Yeah, you're paying a little higher interest rate, but you're getting a little better deal. So then the question is, what are the odds of the interest rate being lower in the future? So I just pulled this chart, Google pulled it right up for me. This is a Freddie Mac chart, but going all the way back to 1971, what have rates done? Well, obviously, you know, they're comparing our current time to the 80s a lot. Well, interest rates spiked up. They were over 18% in the early 80s. But look, by 83, they were down to between 12 and 14. And there was another little tick up. But within a few years after that, they're down to 9%. And if you look at everything since then, yes, they've gone up and down, but the main trend is everything has gone down. And even if you look down at 21 on this chart, you see the rates were low. They've spiked back up just like they did in the 80s. I think there's a good chance that they'll be dropped back down over the next few years. So if you need to buy a home and you're considering paying rent as opposed to buying, yeah, you're going to pay a little more interest right now. It's probably not going to be forever. The benefit to you right now is you can do an FHA loan, you can do a VA loan, you can do a conventional loan. You're not going to be stacked. Your offer's not going to be stacked up against 3 or 4 cash offers. And then if you are paying cash, then the rates don't matter that much. But if you're financing, you can get in the market now without competing. In a few years, most likely refinance that rate back out, but you're going to be able to buy now cheaper than most likely for less than the guy 6 months ago, simply because you're not competing and you're not having to jack your, bid your price way up. So hope this has been helpful. Hope it gives you something to chew on. Again, this is not financial advice. I just sell a lot of real estate and I see the market, I see what's going on. And I feel like now there's some advantages to buying now that people that bought in the spring did not have. Those being primarily, you're not competing and now you're able to do an inspection, appraisal, building contingency, protect yourself in the buying process. This video has been helpful. Click subscribe, like our channel, follow us. And if we can do anything to help you, friend, family member, buy or sell real estate in the Athens area, please reach out to us.